is NTV.
Welcome to this conversation on NTV Kenya. As always, if it's Thursday, you know it's time for topical public interest issues, many times affecting policy levels in this country. But tonight, we want to talk about the subject of Islamic finance. 2 weeks ago, when I did a story about CMA approving the debut Sukuk in this market, there was a lot of questions around what's a Sukuk, how does it work, why is it even called a Sukuk in the first place? And tonight we're delving deep into the subject of Islamic finance. And with me, I have a very eminent panel, starting with the chairperson of the Capital Markets Authority, that's UGA's Sheikh Mohammed. Thank you so much for joining us, sir.
Thank you.
We also have Professor Ahsan Lakhsasna, who is the CEO of Salihin Sharia Advisory. He's a consultant on matters regarding Sharia and Islamic finance. Welcome, sir. Also on stage, I have Jafar Abdul Kadir, Islamic finance consultant. Thank you, sir.
Thank you.
And finally, Sheikh Ibrahim Lethome, who is an expert on matters Sharia compliance. Thank you, sir.
Welcome. Thank you.
Gentlemen, glad to have you on set. Let me start with the chairman. And chairman, ever since we put this poster out, we have received lots of questions around what exactly is Islamic finance and why is this discussion topical at this time? Chairman, take it away.
Thank you very much. Glad to be here. Islamic finance is an investment portfolio or opportunity for a global investment opportunity, if I may say, which is mainly for the ethical and moral investors. Of course, I'm not saying the others are immoral, but with an inclination towards that. And they're mostly associated with the people of the Islamic faith. It follows the Sharia guidelines, which basically there are a set of rules surrounding it, which basically prohibit certain transactions. And therefore, on that basis, it is very much defined. So it is on a very narrow, focused path towards investment. But mostly the idea behind it is, you know, an alternative mechanism. So there's the mainstream investment system as we know it, and then there is Islamic finance, which is another alternative with a set of rules. So on the Islamic Sharia principles.
Very good introductory point there, Chairman. And let me cross over to Professor. Professor, someone might be watching and wondering, okay, so we have, if we could call them the traditional mainstream instruments of investments, then we have now what you're calling Islamic finance. What are the distinct differences between these two, and why should they matter to us?
Well, thank you very much. Basically, both sharing the concept of being financial intermediations. So being conventional or Islamic, I regard the financial intermediations. Serving the customers, offering banking, takaful or insurance, capital market, different investment classes. In the banking, offering of the products and deposits. So if you look at the form and the product and services offered by conventional or Islamic, you may see similarity in the form. But when you go to the substance of it and the underlying process, you may see the differences. And as you know, the conventionally speaking, so it is driven by money lending and borrowing, by charging interest upon whatever transactions you may call it, especially in the financing part. And from a Sharia standpoint, this interest is not regarded as permissible, meaning it is not regarded as an instrument to generate income. As you know, there are permissible income, non-permissible income. And this is even for the common sense. Like, for example, stealing money, you may generate income from stealing, but stealing is not allowed by the law.
Yes.
Bribery, you may generate income from the bribery, but it is not allowed by the law. Similar from an Islamic standpoint, on Sharia standpoint, there are non-permissible income. Among them, which is endorsed also by Christianity and Judaism and Islam altogether, that generating income or building wealth upon charging interest is not allowed. And as a result of that, different alternatives solutions has been provided to offer the same product and services that has been offered by the conventional finance,
yes,
but providing Sharia permissible means of income. And therefore, some new instruments have been replaced the interest component, which is the trade base, buying and selling, which is a lease base, which is the partnership equity. Those instruments have been deployed to replace the interest, and therefore the Islamic banking, when they interact with the consumer, it is regarded as a permissible income and permissible dealing, which is accepted by Sharia, similar to consuming food. When you go to a non-halal restaurant, for example, as a Muslim, they are not allowed to eat non-halal food. So that one, at the same time, you may eat a halal food as a Muslim. And if I give just a quick example with any international brand of franchise like McDonald's, KFC, Pizza Hut, and so on and so forth, when they use meat. So you may see that a burger, if it is, for example, in the United States, it could be non-halal and Muslim cannot consume it. But the same a brand of McDonald's in, for example, Malaysia or other Muslim countries, so it is prepared and produced as a halal. So we may consume the halal burger, and we don't consume the same halal the burger produced by a third party. And the reason, even though they are similar in the form, but when you look at the process and the way that has been prepared, you see the difference. So that's the one of the ground reason of pushing for Islamic finance as one of the alternatives, financial intermediation.
That's a very good point to segue now to Jafar. And Jafar, the question I have is, would it be correct, having listened to what the professor said, to say that on the one hand, Islamic finance is largely around asset-based kind of return, whereas on the mainstream side, if I could call it, we look at interest and not just asset-based return, such that if I bought an asset and I flipped it over to you, that's fine. But when I introduce the aspect of interest, then there's a problem. How does that work?
Thank you. Islamic financial transactions are normally undertaken on the basis of underlying assets, as you said correctly. Meaning, unlike the conventional financial system, where you give money and expect a return in form of money on the money that you have given, for Islamic finance, you must deploy money to create value, meaning you can participate in trading, you can have dealings that have an impact on the real economy, because Islamic finance has a direct linkage with the real economy. So it means then you can participate in trading, you can undertake buying and selling of assets, or don't actually consider money as a commodity. Money is actually taken as a store of value, a medium of exchange, and a unit of measure from the Islamic finance perspective.
Very good points there for clarification. Let me come to Sheikh. When you look at the Kenyan landscape, how are we doing as far as Islamic finance is concerned?
Thank you very much, Julius, for that question. I think we are doing very well. Having been a player from 2014 and even before that, I think we are doing very well. And as it was said here, when we talk about Islamic finance, we are talking about financial transactions that are in conformity with the teachings of Islam. Remember, we have a sizable number of Muslims in this country. We also have other people who are not Muslims, but they've been looking forward to having transactions that are ethical according to them. Maybe where we can get into financial transactions without involving ourselves in interest and other forbidden transactions. So I think we are doing very well. Because if you look at the journey that Islamic finance has taken in this country, it's about 16 years old. We have now 3 full-fledged banks, Sharia-compliant full-fledged banks in Kenya. And then we have also 2 pension funds, and one of them that is leading now in this country is CPF Saleh. And maybe I have a bias because I advise that one, and I have to mention that. And then, of course, we have several banks first-tier banks like Kenya Commercial Bank and other banks that have windows also, Sharia-compliant windows. And we have so many people now who are moving away from the conventional financial system now to the Sharia-compliant financial system. So I think we are doing very well. People also feel that they are better off investing using Sharia compliance vehicles like Murabaha, Mudaraba, and the rest. Those could be terminology that are difficult for you, but we are busy out there. Our work is to try and explain them to the people out there.
Maybe I should just explain them to us.
Yeah, let me first of all begin by talking about my role in all this. I'm not a banker.
Yes.
I'm not employed by any financial institution. I am an independent advisor, Sharia advisor to financial institutions that are offering Sharia compliant services and products. I serve in the Sharia board, and this is one of the requirements for any institution to come up with products and services that are Sharia compliant as a requirement by the international standard setting body called IOFI, which is based in Bahrain. One of the requirements, a must, Julius, is that there has to be an independent body of scholars conversant with Sharia, that is Islamic law,
Yes.
to advise the bank. They are not employees, they are independent. But their decision, in as far as Islamic finance is concerned, in that institution is final and binding on the institution. So I serve in that capacity. I'm the chairman in two of them. One of them is KCB Sahel. I'm the chairman of the Sharia Advisory Board, and CPF Salih. And our work is very simple. Any product that is developed by the bank, the management of the bank, and they want it to be Sharia compliant, we go through it and then approve it as Sharia compliant. And what is the measure? We have the teachings of Islam here in as far as finance is concerned. We look at the product and it has to be tailored to be in conformity with that. So approval is one of the things that we do. Then after that, during the process of implementation, we also ensure that it is implemented according to the teachings of Sharia. For example, the contracts, the documentation has also to be in conformity with Sharia. And then periodically, we also carry out what we call Sharia audit to see for the past period, have we been compliant or not. So that is what we do. We also move around educating people. Remember, this is something new, not only to the people who are not Muslims, even to many Muslims, this is new. So we know we need to invest a lot in education, educating people about Islamic finance, and this is what we are doing.
Fantastic point there, Sheikh. Let me come to Chairman, and to pick on something which the Sheikh has said, is that Islamic finance products are not limited to Muslims. Maybe just comment on that.
You know, I came to know that Christianity also does not allow interest, but somehow, I don't know where we missed the boat, but I think the whole point of Islamic finance, and this is the ethical and moral issue I had alluded to, the whole point of that is that no one gets hurt in the process. It is a shared responsibility. We call it shared benefit, shared risk. So if we are investing, and you are the one with the upper hand in this situation, you are the bank or you are the financial institution lending me money, situations are where I will be the one on the short end of the stick. So this ethical thing says, no, it shouldn't be like that. Basically, we should share profits as well as losses. One of the key components of Islamic finance is shared benefits and shared risks. It's one of the cornerstones of what Islamic finance is all about.
Yes.
Basically, beyond the interest, the products and the way they're structured. For example, right now, the Islamic banks and windows, Islamic banks with, conventional banks with Islamic windows, and takafuls. For example, if I was to talk about takaful and the issue of insurance in Islam, you will find that it is a communal thing. Basically, it is a society where you pool, like you donate money into a pool to manage risk. And therefore, if one of the members is afflicted by an accident or something happens to that member, that pool will pay for it. And whatever remains, we give it back as dividends.
Yes.
I don't think there's no more ethical than that. So it's not a situation where I give you money and you do, either you pay me or you don't pay me, and regulators will decide this is a contract between you and the Almighty, and therefore there's a higher power to it than even the laws, although the laws are very important as well. So I think the way the products are packaged, the rate of interest, the Shylock related, you know, where the lesser or the person who is in need suffers more. That is what is the essence of Islamic finance. It eliminates that.
Yes.
It creates an what we call an equal playing ground, you know, where both the parties have the same risks and rewards.
Yes.
And therefore, no one gets hurt in the process. So there's a social component to this whole thing of finance, as opposed to the way it is where, you know, strict capitalism as we know it, where, you know, the person with the means ends up, you know, taking much more than they deserve. So the world will be a much fairer place if we were to adopt some of these principles.
A good friend of mine calls it the social contract of financial institutions.
That's right.
Professor, I have a question following what the chairman has said, and this is a question I've been asked by very many people. Let's take a case scenario where I'm the credit officer in a bank, and of course we're in the business of pushing credit into the market. In the event that we have a borrower default, how starkly different would it be in the Islamic finance case versus the traditional case? Because finally, every bank has prudential requirements to adhere to. You're worried about your asset quality.
Yeah, I think for this point, this is what we call it in the risk management credit risk. Now, credit risk does exist in both, I mean, Islamic and conventional. And the reason being is that from a conventional perspective, from day one, a debt is created based on lending. Now, from the Islamic point of view, debt would be created as well, but as a result of deferred payment in sales. So meaning that in both products, being conventional or finance, credit portfolio would be basically created as a result of the means of financing, being an interest-based instruments or Sharia compliance instrument. The only thing that the debt was created as a result of interest versus a sales-based one. That's the point number one. And as a result of that, so the credit portfolio is a risk for both.
Yeah.
A risk for both.
Sure.
Now, when it's come to the obligations, being a conventional or Islamic, the customer is under the obligations to fulfill the requirements and pay on time. Now, when you default, the rules apply the same, meaning that, as you know, there is a kind of a process of recovery and process how to deal with the customers in case he default, you know, maybe once, twice, third time, so letter of notice and even recovery. And you may go even to the court. So that kind of process is imposed to also protect the financial institutions, because at the end of the day, Islamic finance is not a charitable work. Yeah. It's a business entity, yes. A business entity on the ground to make money, but through halal means and permissible way to accumulate wealth. That's it, meaning an Islamic bank is a trader on the ground. And you have the right to put the necessary securities and guarantees to make sure that your wealth is protected. And as a result of that, you may see similarity in the course of recovery in the process, and even of the credit risk weightage. And this is why some of the Basel III requirements, which is also captured in the IFSB, which is put some standard prudentials, risk management has adopted the same approach and the same methodology. Now, the only thing maybe the difference between the two is that there is no, when there is a default, in conventional, you see the compounding elements kick off in the process. Now, in Islamic, there is no compounding elements in the default. That's number one. Number two, whatever charges on interest from the borrower, which will be part of the income for the bank. Mm-hmm. For the Islamic bank, whatever charges could be paid as a result of the delay, and we call it late payment charges, the bank has the right only to recover its cost. To break evens, whatever is above that, it will go to a charitable account, which is managed by the Sharia board, and this money will be charity disposed to the society, you know, hospitals, schools, poor people, and so on and so forth. So that's one of the distinguished basically features when it comes to the impact process. Why it's quite similar, being you have the right to protect yourself. But the sum of the implications related to the charges, Islamic finance treat the case on a fair ground. And the customers knows that whatever amount he will be given, it will not be part of the income of the bank.
Right. Jeff, I know you want to come in, but we have to take a break. When you come back, you will be the first guy to add on to what the professor has just said. But Professor mentioned the IFSB, that's the International Financial Standards Board, and Basel III is one of the requirements when you talk about the prudential stipulated requirements for banks to comply, financial institutions to comply with capital requirements. So I'll remind them this is a mass media forum, so stay tuned. Welcome back to this special conversation where we are delving into the subject of Islamic finance. Tons of questions online. But before I get to the questions, Jafar, you wanted to chime into what the professor just said before the break.
Thank you, Julius. Yes, there's one challenge when it comes to the Islamic finance industry. For the majority of the Muslims who are not financially literate when it comes to Islamic finance matters, they consider Islamic finance as a form of charity, forgetting that it's business.
Yes.
And for the non-Muslims, they think it's only meant for Muslims. So in between that, gaps are created where the beauty of Islamic finance is not felt or the impact is not felt. When it comes to the issues of credit, if you can't qualify for credit under conventional system, you'll also not qualify for it under the Islamic system, because the requirements are the same. By the end of the day, this is an obligation or contract that you need to fulfill. And it's also important for people to note that whether Islamic banks or conventional banks, none of the banks lend their money. Actually, what they do is what they finance or credit, give as credit, is depositors' funds.
Yeah.
So they owe the depositors the responsibility to ensure that they safeguard these deposits and only finance or give it for investment purposes in a way that is secure and very prudent. So that means that in the event of default, the recourse or the due process of the law is actually followed in exercising the realization of maybe the security, the collateral of that facility or that credit facility given, just like what is done in the by the conventional banks. So Islamic banks also follow the same process, but they do it in a very humane way.
Yes.
For instance, let's say a customer who has been given a mortgage facility by an Islamic financial institution. What the Islamic financial institution does is they give the customer the right or give him the space to go and look for a buyer before they come in to exercise their control in realizing the sale of, let's say, the house they had actually given as a mortgage for the customer.
Okay.
That's one thing. Number two is the Sharia scholars also do get involved sometimes in managing disputes or contractual misunderstanding that may arise from time to time. So they look at how fair the bank has been to the customer, and when it comes to adhering to the Sharia principles, it's a responsibility both for the consumer, as a customer, as well as the financial institutions. Okay. So that is how it's different to some extent.
Before I let you go,
thank you.
Three Kenyans are asking here, is there also a demand for collateralization? Collateral.
Yes. Yes, because you can't give a facility without you actually managing the risk of how do you get it back should there be failure. Yeah. Remember, in fact, lawyers will tell you, for any contract that you get into or any obligation that you get into, already you have a basis for dispute. There's a basis for dispute. So how do you safeguard? And for banks, it's even worse because they are giving out depositors money and financing, let's say, a customer using another customer's funds.
Yes.
So what is important is to make sure that security is in place. And that's why I said, if you don't qualify for a facility under the conventional side, you not also qualify for it under the Islamic side.
Let me come to Sheikh. Kenyans are asking online, the Sheikh mentioned about a Sharia audit.
Yes.
What exactly goes into this? Is it something which we as the public have visibility of? Because there could be many products which claim to be Sharia compliant, but in true they're not?
I think that's a very important question and a very good question. And these are some of the questions that we have to grapple with and keep on answering to the people, because we have to appreciate this is something new and people don't know about it. As I said, our role is to ensure the services and products that are being given out by Islamic financial institutions are Sharia compliant. How do we do that? Yet we don't even work for the bank. We are independent advisors. What we do is that we make sure whatever contract, remember the transactions in Islam involved a real economic activity with a real underlying asset. It's buying and selling. Actually, it's trading. You're trading. Okay? So we make sure that transaction, when a customer walks into a bank and maybe they want a facility, like they want a car and the rest. And remember, when Muslims who are holding back and were not getting facilities from the conventional banks out of fear of getting into sinning, because eating interest in Islam is riba, or dealing in interest, so they were holding back. So when the doors of Islamic financial institutions were opened, the same facilities that they wanted to get from the other banks that they could not because of the religion, now they expected the same. People go to banks to get a loan to buy a car, to buy a house, and finance any other activity that they want. And I want to take this simple activity. I want to get a car facilitated by an Islamic bank. Yeah. How do I do that? And me as the Sharia advisor, how do I make sure that you get that car, but in a Sharia compliant way? I'll make sure, first of all, the contract is such that there is a buying and selling. There is a real asset. At the end of the day, you must end up with the car. But there should be no interest, so the bank will not be giving you money. Instead, what the bank will do, the bank will go and buy the car. You go identify the car yourself, negotiate the price with whoever is selling the car. The bank, remember, Julius, what you want is the car, and the car you will get. Okay?
Yes.
So the bank will buy the car from the seller, from the showroom, okay? But remember, the bank is in business. And this is what we keep on telling people. The bank is here to make money, but not make money from money. It's money from trading. Then, because Julius wanted this car, I tell him now, Julius, I've bought the car for you, 2.5 million Kenya shillings. Is a Toyota Probox? No, not Toyota. Julius, you can't drive a Toyota Probox. Prado. This is the Prado VX for Julius, okay?
Amen to those prayers,
then
man.
I'll top up now. The cost, there has to be openness also in Islamic finance. I bought it for you for 2.5 million. I want to make some money out of it. So there will be the cost of the car plus a top-up value of maybe 200,000, 2.7, and it will not change. It is a profit and not interest. So my work is to ensure that the transaction has no interest because it is prohibited. Number two, there is no uncertainty. It has to be clear. Julius, as you walk out of that bank with your car, you know I'm going to pay 2.7 million and nothing more or less, except maybe other transactional charges and the rest. But they will be clear because Islam says there should be no ambiguity. There has to be certainty. Hakuna patapotea. There is no gambling in it.
Yes.
And I ensure that is what happens. So I look at the contract and make sure the contract stipulates that. Again, the element of ownership here. It might not look significant, but the difference between what is allowed and what is prohibited could even come out from the element, at what point did the asset, the ownership of the asset move from the seller to the bank? Even if it's for a minute, it could be real or constructive. But ownership has to move because ownership and risks move together. And then I transfer it now to you is another sale. So there are two sales here. Then the markup. What guides us? We benchmark on the interest because remember we are operating in the market and there is an interest rate somewhere. But for us it will not be interest compounded. It will be a profit. So even if you stay for 10 years, whatever period we agree, it will not change. It will be that 200,000 on top of that. But there is an underlying asset. And that is the most common transaction, which is called murabaha. Julius, let us be very open. You can go to a conventional bank, you get a facility, your intention is to buy a car. But does the bank care whether you buy that car or not? Does it care? But in Islam, In Islamic finance, you want a car, Julius, you'll end up with a car. Yes.
But let me bring the professor here. Professor, I have a question based on what the Sheikh has just said. So I go to my bank. The vehicle is valued at 2 million. The institution buys it, sells it to me at 2.2. How is that different from 10% interest? I know you can argue it's a capital gain, but what is the distinct difference between these two considerations?
Yeah, you see, the money generated, it could be as a result of lending. I lend you money, then I charge the 10%, and this is by definition is interest.
Exactly.
Or I like a supermarket. I buy from suppliers, put a margin, which is a profit margin, core profit, and sell to you. Now there are two differences, and the reason being this is loan, this is buying and selling. Unless someone say there is no difference between loan and buying and selling, that's a different story. The supermarket is not providing loan. The supermarket, they are not generating income as a result of extending loan. They are making profit as a result of selling goods, but they got it from suppliers with a good discount, put profit margin, then they sell it. The only difference between the supermarket and the bank is that the supermarket, they don't disclose the cost and the profit margin. And this is, we call it musawa, meaning bargaining sales. You can discount, you can negotiate, give me some discount. That's very open a trade. But in the banking, they disclose the cost and disclose the profit margin. This is by definition, we call it murabaha, or it is a cost plus profit. So there are two differences. You cannot assume they are the same. Otherwise, we cannot distinguish between partnership, sales, lease, all the same, which is not. So return on the lease, called rental. Return on loan, called interest. Return on sales, called profit. Return on agency, called fee. So there are terminology. We have to honor that. Otherwise, we cannot come to a common understanding. So the point is that Islamic banking, in their offering, so they don't allow to generate income as a result of interest, but they can generate income as a result of other full range of contract which are allowed by Sharia.
Chairman, you look like you want to come in.
Yes. You know, the issue of compounding is also there.
Yeah.
You know, the issue here is you could actually take a conventional loan to buy a car, but by virtue of the way the compounding works, interest, it really can pile up very quickly. This one is a bit fixed. You know it. There's no fine print in Islamic contract. Clarity is important. You know, there's no fine print. If you might look at the page and half of it is small print, you don't even see it, and somebody has to read in between the lines to know what is going on. Anyway, I think the issue of compounding and interest and the fact that your debt situation can really spiral out of hand is, first of all, a problem in conventional interest-bearing instruments, especially like, well, if the car one was an example of it.
Yeah.
And I want to also repeat that if you default, I think there is something, maybe these scholars will correct me, but what I know is that, you know, your asset, whatever you've put into it, you still have the opportunity of recovering some of those things, especially if they are not fast depreciating items. For example, if it's a house and you've put in so much. You know, conventional loans, you've defaulted, it will be auctioned at the lowest bid and it's gone. Yeah. But in this one, it's not like that. You get an option to go sell the house, even if they sell it and they make money, they will only take what was theirs. They can't take beyond that. So there's a bit of ethical something in there.
Jafar.
Okay, let me give clarity to this. Julius, your intention is a car. You went to an Islamic bank, they put you through a process, and you end up with getting a car at the end of it. You go to a conventional bank, you get money, you get a car. We're not keen. Don't get a car. We're not keen on the result. Yeah. We are keen on the process. It's the process that determines whether it's Sharia compliant or not. And I said it, that the conventional finance works in a way that money is taken as a commodity. You trade money, give money, and get a return in form of money also on what you have advanced. But when it comes to the Islamic finance the practice, money is not a commodity. Money is sterile. It doesn't have actually any value unless it's deployed. And money is actually appreciated as a store of value, a unit of measure, and a medium of exchange. So that you should be keen on the process to see that it is Sharia compliant. And then the other bit is, unlike the conventional finance practice, Islamic finance has a direct linkage with the real economy. That's why there's a strong emphasis on having assets to be underlain to be under the basis for any transaction that you undertake. It could be an asset that is in existence now, or an asset that will be produced later, or your usufruct, or the beneficial usage of an asset through leasing practice. Thank you.
Gentlemen, I have a question, and I don't know who will answer this question.
Okay.
We have conventional banks with Sharia compliant windows.
Yeah.
When these banks take our deposits, they invest in government securities which give interest. How sure are we there's a Chinese wall between my deposits as a Christian versus those deposits which go through the Sharia compliant window? Maybe this is where the audit comes in.
Yes.
But secondly, is when they report their profits and numbers and we look at interest income, we never dichotomize that this one came from the Sharia compliant window and not. I don't know who will take it.
Okay.
Jafar will take that, and I'll take part of it because
Thank
both of us were involved in starting up a window, the largest in the country, KCB Sahab.
Yeah.
So he'll give his part, I'll give my part.
Jafar, go first.
Thank you. Thank you. When you look at the history of Islamic finance, even globally, the drive to start Islamic finance and tap into the potential of the Islamic finance market was initiated by the conventional banks globally. If you look at the likes of HSBC, Barclays, Standard Chartered, all these. And they actually created units within the banks that administered, they developed these products and rolled them out. That is on the conventional basis. In certain jurisdictions like Malaysia, Prof will actually comment on this, and even Oman and other GCC countries, they also actually allowed conventional banks to start Islamic banking on a window basis. But as the industry progressed, they now made it impossible for any conventional bank to start offering Islamic banking products on a window basis. But there are strict, the process that you undergo before you are allowed to roll out Sharia-compliant products as a conventional bank. One of it is you must have a Sharia board in place. What is the work of the Sharia board? As Brother Shaklidom has said, they get involved in the approval of the products, of the approval of the contracts, and related documentations in that process. They also get involved in supervising the institutions to make sure that they follow what they have approved. They do also participate in the review process of what has been they had approved for the banks to undertake the implementations of the same. And then they also do now audit to make sure that there are no gaps. Should there be gaps, and maybe the institution failed to comply with the Sharia-compliant guidelines given by the scholars, then what happens is any income that's realized through that process is deemed not compliant, and the institution is compelled to put that into charity. And the charity account in these institutions are administered by the scholars themselves. And when the banks put money in the charity account, the scholars normally use it and direct it to charitable causes. The banks don't benefit from that even as they do for the CSR. So silently it's given, and it's not announced that this came from KCB or from National Bank or from, let's say, Gulf African Bank. Sorry to mention them, but that is how it is.
Okay.
Now, the other requirement is they must have a robust IT infrastructure that segregates the funds. That means then, at any one time, you're able to query your portfolio. You're able to know your customers. You're able to know the customer numbers and the deposit levels you have. Then number three, you must also have a very robust control process internally. You need to have a Sharia auditor and a Sharia compliance officer stationed within the banks.
Yeah.
And then number four is you must have well-skilled manpower that are involved in the provisions of those services in the banks. Then number five, there must be commitment from the shareholders, from the board and the senior management that they will adhere to the Sharia guidelines.
Yeah.
These are some of the things that internally, like for instance, the banks that actually offer conventional Islamic banking products on a window basis, internally they're able to know.
Okay.
But sometimes because the income realized or the portfolio is not that significant, is not actually published out there. The other challenge that is there's no regulatory requirement for them to make disclosure.
Exactly.
But it's voluntary.
Yeah.
It's voluntary. It's actually best practice for them to publish it outside there for them to know. But the Islamic banks do disclose that. They're able to tell that. Yes, you said it right, that there could be fears that deposits mobilized from the Sharia banking side could be deployed in government securities. Is one challenge the Islamic finance industry faces in this country. Liquidity management is actually a challenge.
True.
When they have excess, they have nowhere to actually invest in. Unlike the conventional banks that have avenues to deposit, to actually invest in government treasury bills and bonds. The Islamic banks are actually limited. They're handicapped. Yeah. Then that means that they are not actually operating on the same level playing ground. They are disadvantaged.
Jafar, let me just hold you there and bring Sheikh to comment on the same.
Thank you. You asked about the Chinese wall.
Yes.
There it is. I think he's made it very clear. There is total segregation in the system. And for me as a Sharia advisor for such an institution, where we have now the conventional bank and then a window operating under that, one of my duties here is to ensure there is that total separation. So we have somebody designated as the head of the Islamic finance. His work is to ensure there is total segregation. We have also staff that are dedicated to deal with Islamic finance. The documentation is also different. And actually within the bank itself, they know that there is total segregation. And for whatever is under the Islamic banking has to be strictly in compliance with Sharia. And even when reporting, at the end of the year, during the AGM, they will tell you this is what you have been able to generate through the Islamic window within this bank. And I want you to compare this with a restaurant that serves all manner of foods, but there is a section within that restaurant for halal food.
Yeah.
Okay? You go there and say, I want the halal food. Doesn't matter whether the restaurant is an Islamic restaurant or not, but is there a section that sells halal food? If there is that total separation, if I am sure that from the source and the way the food is prepared until it is served to me, it is done in a Sharia compliant way, there is that total separation, what you're calling the Chinese wall, then that becomes Sharia compliant. Ideally, we should have full-fledged Islamic institutions. But let me tell you, go to countries like, I went to Malaysia where a professor teaches, and I found that some of the biggest banks actually started like windows. I think in UK also is a window. Yeah. You go to a country like Oman, I think one of the largest financial institutions actually started as a window. But ideally, I think the direction to go is to have a full-fledged so that we avoid that confusion. But this is a question that people keep on asking us. And you know the way they put it, they compare, you know, for the Muslims, pork is haram,
Yes,
pig.
Yes.
Pig and its product is haram. And then goat is halal, as long as it is slaughtered properly, Julius. Yes. So they ask you, now, this is a prohibited, let's say, I'm not saying positively, let's compare now the conventional bank as a pig that is prohibited from Muslim because of interest. And a goat, I want to compare it now to the window here. And they would say, how can a pig give birth to a goat? And we have to explain that actually it's not a question of a pig giving birth to a goat and that. As long as you make sure there is total segregation, there is proper supervision or what we call Sharia governance structures within the bank, then we are home and dry. The other thing that gives comfort to the Muslims, they just need to see who is supervising that window. Yeah. If it is a person who is credible in as far as the Muslims are concerned, then they are cushioned. They say, as long as Sheikh so-and-so is sitting there, we are comfortable.
Thank you, Sheikh. Let me just get some feedback here online. Chiboli S. Shakaba MBS says, very informative discussion on Islamic finance. I think the next time I want to buy my Prado, I will transact this through that mode of financing.
Thank you.
Chairman, come in.
Yeah, I just wanted to respond to Sheikh Ibrahim Litome. The issue is about prudential frameworks and requirements. If that was the question regarding segregation, I think there's still an issue. You know, there's a difference between self-regulation, where the Sharia advisory board and the internal staff do something, and prudential requirements. Still, I have an article here from 2017 in the Business Daily by IMF, complaining of the same things, of that the fact that, you know, there are various issues with regard to Islamic finance, and the fact that the legal and prudential requirements and frameworks are not sufficient. So there is that issue. So there are many challenges, and we can talk about challenges, and part of it is that we have not moved the needle in that space as much as should have been moved. We've made significant progress to where we are, but in terms of the regulatory and the legal and policy frameworks, still there's a lot of work to be done. And that is where, on the prudential requirement, I think there is still a gap in that, in terms of reporting, in terms of segregation, in terms of what? There's still issues.
Chairman, let me stay with you.
Yes.
Someone here is saying, congratulations on the debut Sukuk in this market.
Thank you.
One question. How are we talking about Sharia compliance, and yet we are discussing an internal rate of return of 11%?
You know, that brings me back to the issue of the car. You know, we were talking about the car earlier. Remember, he told you that the markup that is put on a car is on a basis. There must be something informing the rate of return, and that's the market. So it is not out of a vacuum, and I think the scholars, Prof. and Ibrahim are going to chime into this. But definitely, you know, there is a yield curve. There is you know, how we gauge the market. So there is a basis for this, and I think that's how those numbers are arrived at. And it's not out of nowhere. It's not. Yes, it is true. The profits have to be made. But how do you arrive at those profits? You have to be competitive, isn't it?
Yeah.
And the same thing with housing issue we can talk about also, especially the affordable housing.
Yes.
Same thing. Yes, you may not get the same rates as, let's say, treasury bill or bond, but there is still a market, you know, on the capital markets in terms of investments that you need to look at. Equal classes of investments, especially real estate or whatever it may be. Yeah.
Prof, on that question of the internal rate of return.
Yeah, for this one, this is more related to the benchmarking. So number one, the structure of the Sukuk or any product must be Sharia compliance. Number two, it should be based on a specific selected contract. Let's take leasing, which is a lease contract. A lease contract has a return, which is the rental. Now the questions here is how much you want to put in your pocket, meaning how much profit you want to have in the sales, and even in the investments, like, for example, using a partnership or investment, people will go for profit, and there is a rate of return on my investment. So we agree that the structure is permissible, and the what's so-called making profit is permissible. The question is how much you put in your pocket, how much you cash out. And here comes the benchmarking. Benchmarking is allowed according to IOF, even though it has been done on a conventional, what's so-called variables. If, of course, you can have your own benchmarking without going to the mainstream finance or the conventional finance, that will be good. But in case you benchmark on the market, and the market is dominantly driven by the conventional, so basically you have no choice but to benchmark on that rate which is driven by the interest rate. That one, there is no issue on that, because you are not structuring your product or your offering based on an interest. It is a Sharia compliance. You just want to put how much to put in your pocket. Now, if you're above the market, you may not be what's so-called practically offering the product. If you are below the market, you may basically impact it in profit. So the best way is to put it as a par with the market, in addition, of course, to the guideline pricing. So we don't see that kind of benchmarking in the sales-based instruments, in the financing, in the fixed deposits. in the leasing, in the Sukuk, any kind of product. Because at the end of the day, keep in mind Islamic finance is 5% compared to the global financial assets. So you are still being dominant and driven by the force of the conventional one. And typically you will benchmark on what the market. Similar, if you want to sell a halal chicken, and everyone in the market is selling non-halal chicken. So how much you want to sell? You have to go to all this peer, how much they are selling the chicken, and you price accordingly. Now, so still the chicken is halal, even though your price is according to the non-halal chicken.
I see. That point by Prof again takes us to a second break here. When we come back, we'll be discussing the state of the market, the policy environment, and the outlook. And the key question which is being asked here, do we have a sovereign Sukuk coming? Stay tuned.
Karibuni, hii ndio base ya the best local entertainment. Baby,
tumefungulia Magic. Starting from the 7th of October, Maisha Magic Plus will be on DSTV Access and GoTV Plus.
Red Bull gives you wings.
Hi there, my name is George Washuri, CEO Optiven Group, and I'm very excited to introduce Ushidi Gardens Nakuru. This property is developed by Optiven, and we are doing compacted maram roads. We plant the trees, fence the property. What's unique about this property? It's only 1.2 kilometers off the highway and 18 minutes from Nakuru City, the pink city. So please call this number 0790 300 300. Optiven, we have you covered.
How do you keep your toilets clean?
I use normal detergent and bleach for washing.
The detergent and bleach cleanless can leave behind yellowness, rust, and germs.
Harpic's 10 times better cleaning compared to regular detergents and bleach, and kills 99.9% illness-causing germs in your toilet, including the COVID-19 virus.
We asked the children, how many of you brushed this morning? And this little boy, his hand didn't go up. And I said, well, why didn't you brush this morning? He said, my brother was using the toothbrush. If I'd waited for him, I would have been late for school. I'm sorry, I get a bit emotional when it comes to that. To be able to change a child's life, to be able to bring back that confidence about their smile, for me, is phenomenal.
This is NTV.
Tonight,
our people living along Sondu, that please don't retaliate. Please don't take the law into your hands.
Big names are behind this violence. They include leaders and politicians from neighboring counties and in the national government.
courting peace. Leaders call for sanity following senseless killings at the border of Kisumu and Kericho. Schools, businesses remain closed. Also tonight,
mtu afanye kazi. Watu wafanye kazi. Wacha nikuambie hii serikali nitainyorosha kabisa.
Moving on swiftly. Moses Kuria welcomes a new assignment even as he grumbles about the cabinet shake-up. We've got the backstory. Plus,
the living standards should be improved so that the teachers live next to their places of work. It is important.
The teachers we need for the education we want, and the incessant reforms in between. We tell you why teachers have little to celebrate as the world marks their day. And the dreaded police job. The president says sending the police to Haiti a noble duty. Everybody else thinks not quite. The debate on front and center tonight.
Welcome to Indy Kenya, coinciding with Manufacturing Expo 2023. Grab the opportunity to meet over 80 Indian manufacturers in various industries: oil and gas, power energy, solar, chemical, food processing, agro, packaging machinery, automotive and construction. We're at KICC, Nairobi. Mark your calendar from 11th to 13th October from 10 a.m. to 6 p.m.
Baby girl, si unakumbuka leo ndo ile day ya bashing yetu tulisema tutaenda? Usikose?
Ai, mimi nikose. Ai, mbona gari ni KDB na kwa app imeandikwa KCW?
Sasa wewe kwa nini uko na maswali shigiste? Si haja bora ufike. Penikule kichwa.
Little. Safe, reliable, and convenient rides. Download Little app and start riding today.
Did you know that malaria is a top 10 cause of death in Kenya, with over 10,000 Kenyans dying every year from malaria? And the reason being a mosquito. We believe protection and prevention is the best cure in the fight to end malaria. Mortein Doom, with its trusted formulation. It provides protection in seconds. So spread the Mortein Doom message of how we, you and I, can fight to end malaria.
Mortein Doom, Kenya's #1 choice.
A perfect family is not always what it seems.
Hapa hakuna mtu anaweza kunificha kitu.
When a father's past is revealed after his death, leaving his empire in the hands of his wife, son, daughter. The war of succession is on. Inca Siri starts October 9, only on Maisha Magic Plus channel 163 on DSTV, GoTV channel 3.
Now, welcome to the tail end of this conversation. Unfortunately, we have only 20 minutes to go, so we'll keep it very snappy. Let me start off with Jafar here. Many Kenyans are asking, how do these Islamic finance banks make money if we're discussing the issue of no interest? I know you've touched on this before. Briefly, just to clarify for us.
Thank you. Islamic banks do make money in many ways. Just like the conventional banks, they do offer services. And one of the services include payment services or payment solutions. That they charge fees and commissions related to that.
Yeah.
They also make money from Forex. You can trade in Forex, currency exchanges, and you make money through that. They do maintain accounts for customers. The account maintenance charges, ledger fee that banks charge. They also charge the same. Now, where they differ is in the financing side.
Which is the core business.
Which is the core business of banking. When you look at conventional banks, you will say conventional banks give loans. Islamic banks loans is actually considered to be a benevolent act. Qatr Hassan, meaning it's a benevolent loan. So in Islamic finance terms, you can't have loan. A loan, when you give a loan, then you expect it's 10,000 you have given, you get back 10,000 back, nothing more. That will be added. However, Islamic banks make money through financing. They facilitate actual buying and selling. If you look at the section, the Islamic banks actually operate on the basis of exemptions granted by the CS National Treasury. Before it was a Minister for Finance, meaning Section 12A and C of the Banking Act. The Islamic banks are actually exempted from that. They operate on that basis, meaning they can buy and sell assets or commodities. They can own assets and sell. For the conventional banks, they have actually a limitation. They are not allowed to put more than a certain threshold, well defined, in any fixed asset. And those fixed assets are only meant to use maybe for bank premises or the headquarters and that. But Islamic banks are actually exempted from that, meaning they can undertake trading, they can do buying and selling. So through buying and selling, you generate profits.
I see.
They can also do, generate income through also leasing.
Yeah.
They can also do through leasing. Those are some of the, approaches the Islamic banks use to generate money.
Thanks for that. Chairman, Kenyans are asking, we've talked about the Sukuk, which is currently in the market. Do we expect a sovereign or government to come into the market with a potential issuance? We've had this mentioned from Treasury before.
That issue has been on the table for some time, as of recently, in the last 10 days or so. The conversations were still there. I know something is being thought through. There are some small impediments here and there in terms of the structuring of sovereign sukuks, in terms of the enabling environment, legally, as well as in terms of regulatory and policy frameworks. Beyond that, I think the will is certainly there. What I know is my conversation in the last 1 week or so. I am certain about the will. As far as the structuring of it, in fact, we are supposed to be in a committee to look at that together from the various players in the financial sector, regulators. Yeah. But I don't know. I have no timeline. I know the need is also there, certainly. Yes. Yes. But I believe there is small issues that need to be gotten out of the way. But the will is there, the need is there, and therefore it's just a question of time.
Okay.
It's definitely a question of time.
All right.
Yeah.
Sheikh, let me come to you. The issue is being raised that the chairman spoke about the issue of the prudential requirement gaps. When you look at Kenya from a policy perspective, what do you think should be done to take the Islamic finance landscape forward?
Yeah, thank you very much. You know, we need a standalone legal framework for Islamic finance to grow here. Because, as he said, we are operating under an exemption law, an exemption within the law. So I think we need that legal framework to help Islamic finance grow. We also need, as we told you, for a financial institution to offer Sharia-compliant services and products, there has to be a Sharia board. Now, as it is now, we have individual institutions having their own Sharia advisory committees. And you see, we are human beings. So for standardization and to make sure that they are also answerable to a certain body, we need, at the national level, at the central bank level, a Sharia advisory board at that level. And I think there are efforts to make sure that that is realized. Again, remember, Jafar said here, the moment you sign a contract with somebody, there is a potential of dispute, as in human transactions. Now, where do we end up? We end up in the courts. Are these courts, do they have the capacity to handle or to try cases that have emanated from Sharia transactions? So we think also the judiciary also. As it is of now, we know that there are many cases now, because you can imagine for 16 years, banks have been operating. There are disputes, I can tell you for sure. There are disputes. And when these disputes occur, they are usually referred to arbitration, but sometimes arbitration does not work. So you end up in court. Now, do these courts in Kenya have the capacity to manage this? Again, you find there's a problem, and that's why they have to keep on asking for expert advice as they deal with these cases. Again, there is a big information gap. The questions that you are receiving from the viewers out there is an indication of the kind of many questions that need to be answered out there. Yeah. So there is an information gap, and I think we need to invest a lot in educating the people and giving information out there. Again, many people think that this is just for the Muslims. And we need to educate people that is for other people. Yeah. You go to just walk into any bank that is offering Sharia compliant services, you'll find maybe more than half the staff there are not Muslims, but they are offering those services. So we need to correct those misconceptions.
I see.
But the future is very promising, very promising.
Prof, same question, but really just flipping it a little bit. What are some of the best practices we can pick from markets such as Malaysia, which are normally touted when it comes to Islamic finance?
I think maybe one of the important points to look at is maybe a legal framework. Malaysia, in 1983, enacted the Islamic Banking Act 83, followed by the establishment of Islamic Bank, 1984. And in the same year, the Takaful Act been enacted, and the basically legal framework start to emerge and supported by Sharia governance framework, standard for policy documents from the central bank standards and guidelines. Again, on the Islamic capital market, the Islamic Capital Market Act was enacted. So I think, in a summary, if I may highlight that the legal framework and the infrastructures of the banking should be set, and working on a very comprehensive ecosystem. Because different institutions should operate together and in a different market, which is integrated. So you have banking, you have to have takaful market. You have a banking market, you have to have a takaful market, which is Islamic insurance. You have to have an Islamic capital market. You have to have a commercial bank, investment banks. You have to have a Sukuk stock market. You have to have a money market. So infrastructure is a key for very robust developments, and a comprehensive ecosystem supported by clear legal framework, Sharia governance framework, Sharia audit framework that enable the institution operated in a very clear directions.
I see.
That's the point.
Let me invite you to make your closing remarks. And maybe let me start with Jaha, because there's a question here which I think you should respond to. And this viewer is asking, where exactly do these guys invest? Because if you look at money market funds, there's an aspect to which they have exposure to interest. If you look at pension funds, there's an aspect to which they have exposure to interests. If you look at all these asset classes, there's almost an aspect of interest coming in. Where exactly would people who adhere to this Sharia compliance be investing?
Thank you, Julius. Yeah, it is actually a very big challenge. It actually comes down to the need for liquidity management instruments to be in the market. Like the equivalent of a bond, which is Islamic Sukuk, will have actually been a very good tool. What actually institutions do is make placements. Like, let's say an insurance firm places with a bank, or bank places with another bank, or they use it even for lending or financing their customer needs. But it's a big challenge that we do have. And when it comes to Islamic finance, perception is reality. Perception is reality. So the challenge is there. The challenge is there, but that doesn't mean that with these limitations, they're not doing it the right way, but they can do better. Thank you.
Maybe then give us your closing thoughts.
Oh, okay. Thank you very much. Many times people talk about Islamic finance, and what comes into our minds are actually challenges. But let me give you the beauty of Islamic finance. Every jurisdiction actually sees it as an alternative financing mechanism. For us as a country, it helps in facilitating or actually fostering financial inclusion and financial market deepening. Number two, it also helps in attracting. If we have a very comprehensive framework in place and a conducive environment created, then we'll also be able to attract foreign direct investments. Then number three, we have a lot of infrastructure financing needs. We could actually use mobile, local resources, domestic resources that could be generated through Sukuk, and we use it actually for realizing those infrastructure developments. And the other good thing with also the beauty of having a very robust Islamic finance market here is it will address the needs of financing or fulfilling the needs of small and medium enterprises, because that is actually considered to be the engine of growth. And access to credit or access to finance is one of the challenges that is normally mentioned that affects that segment. Yeah. Then also, you look at the Islamic finance industry, the players, and you look at it has been in existence for almost a decade and a half. And when you look at the contribution they make to the economy in terms of employment creation, and also even Kenya Revenue Authority realizing taxes from these businesses also makes a huge difference. Then what are the challenges that we do face? There are many. We have touched on them, but I could actually go through them quickly. There is need to have a very comprehensive framework in place, legal, regulatory, and tax, as well as let's say governance framework to be in place, so that from the top level, the environment is created in such a way that it's conducive for the Islamic financial institutions to operate and the ecosystem to be well developed for us to realize that. Number two, we do also have issues with talent. Then there's need actually for institutions of higher learning or colleges to develop the right and relevant curriculum to develop talent, for talent pool for this country. We could even export it to the neighboring countries. Then the other bit that we also need is
The last one now.
The last one is actually on the harmonization of the standards.
Yes.
Because we do actually have different institutions operating in a different way. There's need now to actually create harmony in how these products are rolled out and how Sharia governance is adhered to. Thank you very much.
Thank you. Sheikh.
Yeah, Julius, I think the question that people keep on asking, why are Muslims so fussy that even their money, the way they generate their money and the way they spend has to be in conformity with their religion? Is because we believe that wealth is a trust from God, and we shall be answerable on how we earned it and how we spend it. That is the bottom line. And we believe, Julius, that God gave us the manual on how we're supposed to earn and how we are supposed to spend.
Yeah.
And whatever God tells us, don't spend on this, don't earn in this way, we believe is the right one. And that's why as Muslims, we are concerned about that. Just like food, we are concerned about whether this food is halal and whether it is haram the same way. It's because wealth belongs to God, and wealth has to be managed strictly in accordance with the owner's user's manual, the Quran, and the Bible also. Thank you.
Let me come to Prof for your closing thoughts.
Well, my just closing is about Kenya. Yeah, I look at it as a very positive progress. I have been touch in the market for a few many years actually. It has gone in progress. You know, you have 3 Islamic banks, 5 Islamic windows, 1 Takaful company, Ritakaful, an Islamic investment bank. And the visions and directions and the determinations and the will is there. It's just to put it in the right direction. So looking forward that Kenya will be the hub in the regions, just work progressively through a very comprehensive ecosystem, very robust legal framework, and very strong infrastructure. So you can serve the country and the neighboring region as well.
Thank you. Close it for us.
Thank you, Julius. At the CMA, our functions are to regulate the capital markets as well as to promote investments in that sector. So we're doing everything within our power to enhance investments in that sector. One of the product lines in that sector, we have many products, and one of them is the issue of Islamic finance, because there are practitioners, there are players in that sector, there's foreign direct investment to be earned, there's local liquidity that can go into that, and we're just looking for an avenue to enhance investment and production within our country. Kenya wants to be the first or the best in the region in so many, and we've been, as a financial hub, as a technology hub, as everything else under the sun. Yeah. Where we want to be number 1, and generally we've been in the region. But I think we've been left behind, even on this matter of Islamic finance. Complete legislations have been enacted in both our neighbors, which now have a more conducive environment to be able to partake of these products that we are talking about, and the fact that the Muslim community, whether globally, that wants to invest in Sharia-compliant products now might not find us as favorable as they should. So my closing shot is we need to, as one of the financial sector regulators, we're doing everything within our power, and we are also collaborating with other institutions and regulators to bring up this matter and make sure that we pass the necessary legal, regulatory and policy frameworks in order to enhance this thing. And we have serious potential. We have competitive advantages when it comes to investments, and already our market has been much more vibrant, and in terms of size has been bigger than the rest, and it continues. We still have much potential in this sector that needs to be harnessed, and we need to give the enabling environment to do that. In the last couple of days, we've been in this workshop, trying to enhance financial literacy in terms of the Islamic finance sector, bringing together the scholars on this matter and the practitioners in order to create common understanding on what needs to be done. And I think we have that now. And as we proceed, I think we're hopeful that we'll make some progress. And that's why we brought in consultants who've been helping us for a while to, continue cracking the issue of Sukuks, the issue of sovereign bonds, the issue of other products in the market that can actually mop up the extra liquidity that's out there. And so there are challenges. Of course, there are challenges, there are gaps, and we believe that where there's a will, there's a way. Yes. And we need the money now. All right. And why don't we use the opportunity to collect the money through this investment platforms, including the Sukuks. All right. Thank you so much, Chairman CMA Ugas S. Mohammed, and also to Prof. Ahsan, thank you so much for joining us. Jafar, thank you so much for creating time for this conversation. And Sheikh Ibrahim Letome, asante sana for being with us tonight. We have had a very illuminating conversation on matters Islamic finance. We haven't even tackled, I would say, even just half of the questions which have come online, but we intend to have a series 2 of this conversation because clearly there's immense public interest on this subject. News with Zainab Ismail is up next. Stay tuned.